Hi, I'm Jordan Bradford with the Tranel Financial Group, and I am here today to deliver a market update. And this market update is going to be a little different, but I'm really looking forward to talking to you about a couple of really fun topics. So first and foremost, I wanted to tell you where the market finished for the month of January. The month of January was a little bit of a volatile month, but it wasn't quite as volatile as some of the months we saw back in 2020. The S&P 500 started off on a good note, but ended up finishing the month actually down 1%. The Dow Jones Industrial Average also finished down a little bit, about 2%. And the NASDAQ, again, outperforming the other markets, actually went up 1.4%. So we saw, again, similar discrepancies like we saw in 2020 between the NASDAQ, which is our more tech-focused index, and the rest of the broad market. And I think that kind of gives a good example too as to why the S&P 500 outperformed the Dow Jones a little bit as well, is because there are more tech-focused companies, especially at the top of the S&P 500, whereas the Dow Jones really doesn't have that type of exposure. But going into a little bit more depth this time, I actually want to talk about something that's become a big news item here over the last couple of weeks, which is GameStop and AMC. And you probably have heard a lot about these two stocks, and you're probably wondering to yourself, what is going on? Why is anyone that enamored with two companies that relatively have been pretty underperforming over the last year or so? And with GameStop especially, they've seen declines over the last 3 to 5 years. So let me just kind of rewind back a little bit to the start of the pandemic. Right, we had retailers all across the United States forced to close their doors. And GameStop was really no different, right? They're a retail store that sells electronics like video games especially. And as retailers were closing their doors, they were forced to adapt a little bit as well. And unfortunately, with the online markets and being able to buy everything from Amazon to Walmart online to Best Buy online, all of these online competitors really squeezed GameStop's performance and really caused their earnings to suffer pretty dramatically. What was really interesting, though, was that their share price, by the time it got to around its lowest point, around $15 to $16 a share roughly, all of a sudden their shares start to spike. And a lot of people were probably wondering, well, what's causing this? Well, to make a long story short, basically, you probably heard of some terms of Wall Street versus Main Street, or the short squeeze. And basically what was happening here is that a lot of people on this online forum called Reddit got together and they said, hey, all of these big hedge funds are betting against GameStop and AMC and some other companies as well. But GameStop was really the catalyst for this. Because all these big hedge funds, what they did was they saw GameStop, a company that was struggling mightily, and their share prices had been plummeting. And the hedge funds at that point make a bet that the share price is going to continue to go down, and that's really what shorting stocks are all about. It's a little bit more complicated than that, but just in simple terms, you're basically, whenever you hear someone say they're shorting a stock, it just means they're really betting against that stock. Well, as you can understand, right, that's not necessarily always the most savory practice in the market to be betting against companies. And so this group of people on Reddit actually got together and they influenced thousands and thousands and thousands of people to go out and buy GameStop stock. And you're probably wondering, well, could a couple thousand people really make that big of a difference? Well, yes, because they actually got even more people to get involved. And what happened slowly was people started buying GameStop stock, so the share price started going up. Because as you buy more of any particular stock, the share price climbs over time. Well, this caused two problems. The first problem for the big hedge funds was they actually were betting that the stock was going to go down. So now they had to actually cover their bets by buying GameStop stock, which you're probably thinking, oh, that's not great if the share price is going up. If they're buying more stock, that's causing the stock price to go up again as well. So it was kind of a twofold event. You had all of these people using social media to help drive people to these stocks to buy them, driving the price up. And then you had the hedge funds having to cover their bets against the company by buying more stock, driving the price up even further. And we got to a point where at one point, GameStop was trading around $460 a share in the month of January. At one point, they were up over 1,600%, which is just unfathomable, really. And the story with AMC is very similar, although not quite to the grand scale that GameStop was. And so it's really, really kind of an interesting, story here. But I think the point to really take from all of this is that type of market movement is not really investing. That's really gambling. Right? So when I see that happening in the market, what I'm seeing is people just making bets. Because the big problem here is that if you think that this is going to continue, right now the share prices are so much higher than what they should be based on their fundamentals, based on how much money the company is actually earning, which is not very much right now. In fact, they're really struggling to make any profit at all, and yet their share price is way, way, way overvalued. So right now it is to an extent some degree of market manipulation. So that is something to be really cautious of, and why I always encourage people to buy good investments that you know and understand, and you can outline, even in the most simple terms, how is this company going to be more profitable 5 years from now? And with a company like GameStop or AMC, right now, there's just so much volatility. And while, yes, there's a lot of news and there's a lot of people with their eyes on those companies, and in some cases, people are making lots of money. But there's going to be, at some point, a period of time where you're going to hear stories about how people lost a lot of money as well. And I don't think that time is too far out from where we are right now. So what I'm encouraging everyone to do is, if you're curious about it, do as much reading on what's been happening with those as possible, but don't put any money into a company like that unless you're just gambling, because that's really what that is, right? That's not truly an investment when you're not looking at anything fundamental about a company like GameStop or AMC in this case. So I just wanted to give everyone just a quick synopsis about what's been happening, why it's happening, and really just to let you know that if you have questions, reach out to us. That's what we're here for. That's why we're working with you. And if you have any questions at all, you can reach me at 847-680-9050. Thanks, and have a great day.